What is up, team? Chuck with Traders War Room. I'm back at you with another video. Listen, this is your Traders War Room daily video, and it's full of stocks, charts, and news. But what I need you to do right now is hit that like, share, and subscribe button, and I need you to come along with us on a journey. Check the description tab. Tons of tools and tidbits right there at your fingertips to make you a better and more successful trader. Now, if that sounds good and you're ready to rock it with us, then all I got to say to you is follow me and let's go to war. We want to remind the viewer that this is not financial advice. The content is entertainment and education purposes only. You're responsible for every decision you make. We want you to have fun, use caution, and always go to war. Traders War Room is a true one-stop shop for all traders and investors. So check out some of the stuff we got going on. First up, we want you guys to check out our flagship, the Traders War Room Discord, a true one-stop shop over there. We got the real-time buy and sell alerts. We're talking options, stocks, futures, crypto, forex, live trading, Zoom classes, one-on-one mentoring. We got free and paid services. Guys, listen, we got an incredible community over there of like-minded investors. Come check us out today. You won't be disappointed. We got the Traders War Room website, okay? This is the hub for the products and services, man. You can find everything from the Discord to the one-on-one mentoring to upcoming classes. We have to historical classes that you can view right on the website and a pro newsletter, guys. It's a great, evolving website that we're constantly improving and refining. Come check it out today. At the end of the video, we'll talk about the upcoming classes that we got, but let's get into some real stuff right now. Let's talk about the buzz report, what's hot and what's not in the stock market. Okay, as we know, here's how our markets closed across the board. Red on Friday. Another representation. You see a lot of sea of red with pockets of green. Healthcare had some green. Energy was big green. Utilities, big green. So we're definitely paying attention to some of these sectors. Here's how your sectors performed. Energy, no surprise, it was up huge. And financials was lagging. Close to it was technology. So we're definitely paying attention to financials and technology as both of those sectors have been beat up pretty good. So we're looking and hoping for a little bounce here in the near future. Total premiums, calls versus puts, we're starting to see some money flow back into, so that's always a good sign. Tesla got some big money coming in, DWAC, SPY. Well, of course, we got GLD, Apple, Oxy, Triple Qs. But on the inverse side, you know, of course, we got SPY. They got some puts on there, some Qs, Amazon. So kind of 50-50 when you look at it, but the buys are kind of outweighing as far as the big money premiums being pushed in. So let's hope for a big bull day on Monday at the bell. Here's your futures. Now remember, these are glimpses into what could be, not what will be, and this is just getting us an idea so that we can have a plan and strategy moving forward. Most trending tickers right there. USO is a big one. That was killing it last week. Oxy is another one. XOM, definitely paying attention to these guys. You know, a lot of the oil trades are popping, but I want you to caution you before you hop in to just any normal oil trade, okay? They've been on a run for a while, okay? So we have to start thinking, when is the cool down period going to happen? So we got to pay attention and play smart. All right, top news story, no surprise. Oil surges, shares in euro hit the skids. Oil prices soared and shares sank in hectic trading on Monday as the risk of U.S. and European ban on Russian products and delays the Iranian talks triggered what was shaping up to be stagflationary shock for world markets. Next talk is financial sectors, right? JP Morgan pulls investors over potential exclusion of Russian debt from indexes. So they are wanting to know kind of what's going to happen with the shares and investors as far as pulling out on assets that they had ties with Russian different programs and different services over there. So definitely paying attention to that, because a lot of those financial sectors were dealing with worldwide, you know, companies and abroad things. And with the ones with Russia, they got to pull out of there because the ban on Russian type of businesses and trade deals is being put on right now. And again, the third top story is the U.S. gasoline prices soared to highest since 2008 on Russia conflict. What I want you guys to pay attention to with this, okay? We're starting to hear it. Oil, gas, oil, gas, oil, gas, and the sectors has ran up, okay? It will pull back. And we're looking for that cool down, and we can make money on the put side on the cool down. But I don't want you guys to get caught in FOMO and running with it on the rise up, because it could be too much too quick, because it will pull back. So we need to pay attention to it and try to make money on the right direction based off the charts, the indicators, and the sentiment that's rolling. So let's look at some charts and see what we got going on closing out this week and near term. All right, starting off with SPY, as always. And at this current level where it is, we do think that we can push and start testing that 440 range. We need some good volume. We need some good push. And with the markets being down so much, we're due for a good push one of these days moving in. The SPY likes to run here recently, Mondays, Tuesdays, and even into Wednesdays, and then it cools down big time going into the end of Wednesday, Thursday, and Friday. So we're hoping for the same trend. Pushes hard on Monday. We start to test that 440, and we're going to try to make some monies on call at the Monday at the bell. We haven't covered this one before, but the XOP, okay? XOP covers the index for oil and gas, all right? And I want you guys to pay attention to it. Look at this right here. It broke out of its recent pattern, back there in February, and we've been skyward ever since. But I'm telling you guys, just be cautious when getting into these oil trades, especially individually into the stocks, because these are due for a cool down. Man, they've been on a run. Too much, too soon is my opinion on it. I don't know. It'll probably continue to go because gas prices are soaring, but just watch for the cool down, because eventually people are going to start taking profits. The price will come down, and then we'll start shooting back up if we continue the trend in oil and gas. So just be cautious. But XOP, great index for you to get involved with a bunch of companies that deal in this sector. And XLF, okay, XLF covers the financial sector. And why do we pay attention to this, man? The financial sector has been beat up, right? But look where it's at, okay? It's near its bottom, and every time it hits this bottom, we spike up. So I want you guys to pay attention to this. We hit this bottom, we're probably due for a uptrend here soon. Now, if we close below this bottom fib line, which is like at 36.76, okay, then that's going to really speak volume on the particular sector as a whole. But I don't think we do that. I think we start bouncing around here and we look for that reversal to start pushing to the $38 and the $39. I don't think we'll get up to the $40 in the next few days. I think that may take a week, maybe even 2 weeks, but definitely we're looking for a push up towards and past $38, and we probably can make some money on individual good financial stocks, Bank of America, JPM, Wells Fargo, so on and so forth. So we're paying attention to those big time this week as we're trying to make some money on some calls on the rebound. All right, and we thank Earnings Whisper for giving us most anticipated earnings coming up this week. Let's look at some charts that have us interested going into earnings. All right, first of all, DKS, Dick's Sporting Goods. We like DKS moving into earnings. As with everything recently, I'm a little leery about holding through earnings, but moving up into earnings, we like where DKS is at. A lot of people are starting to get back into the sports, and they're doing a lot of business as far as getting, physical equipment going. They're starting to get their apparel lines up, and people are starting to go into the sports and start to feel more comfortable. So I got a feeling that their bottom line is going to be higher, and they're going to show growth numbers in the positive sector. I bet DKS will probably bounce, but if you do decide to hold through earnings, just go light and be cautious, because even good companies that have great earnings have been failing just because of the overall sentiment. Another one that we like because it's really looking bullish on the chart is Petco, okay, WOOF. And we like Petco. Everyone's dealing with their pets, okay? A lot of training has been happening during this pandemic, a lot of supplies on the pets. People have been taking care of their pets and spending money on their pets, and it's becoming kind of a normal thing at this time. So pay attention to WOOF. We got some room to grow. It's been higher than it is currently right now, and I got no qualms with seeing us push into the 19s and even close to the 20s. So I think WOOF does fairly well, and it has earnings this week, so we'll see what happens. All right, Casey. I like Casey's. The general store. This is the gas station. It's done a completely remodel. If you remember Casey's, what they used to look like back in the day, completely different to what it looks like now. Okay, you go into Casey's, they look professional. They got a nice setup. They're really doing great things on the big business side sector. I like Casey's moving into earnings. I think we break out of this current pattern we have here, and I wouldn't be surprised if we start tracking up to $195. So Casey, bullish on this. I think they do well, and I would even gamble pushing through earnings on this particular trade. Next up, Campbell's Soup. I like CPB. I think we start pushing up. I wouldn't be surprised if we start testing that $46, $47 area. Campbell's is going to probably do well. You know, the soup company, they got a lot of things, not just with their normal label, but with also their off-brand labels and contracts that they have with certain stores. So I like Campbell's Soup moving forward. I think they're going to do well, and I think they push up from here. Next one, Crowd. Now, normally I would think Crowd took a dump and probably was a little bit too much and would be looking for the reversal. I think Crowd does well going into earnings, but I'm kind of on the same lines of Crowd as with Snow, okay? I think that it does have some negative room that it can drop, and at the current prices where it is, I think that people think it's probably overvalued currently, and that it'll probably dump after a run going up to earnings. So definitely pay attention to that, and we may try to do like a strangle on this, go with some calls and go with some puts, trying to make money on one of the directions that it does and try to get out of the direction it fails before we take too much of a loss. So we'll pay attention to that, and if we decide to go in on a strangle on this one, I'll make sure I alert. All right, now on to other stocks that I'm paying attention to, not necessarily earnings, just things I'm either in or have my attention. Bank of America, okay? At this level at the bottom, in my opinion, enough's enough, and I think big investors are going to start buying into this, okay? I like contracts of options going long, but also this is the area where I'm not opposed to buying in shares and going long as well. I do think there's an upside very near term of $45 and $50, and if you win on shares, you could easily make $5 to $10 off your shares in a relatively short time. So I am bullish on Bank of America. I think it's a good buy at the current levels, and I'm definitely long on this stock. Another stock that I like, and I'm long on CVS. We got room to grow. I think at the current levels where we're at, we're going to start pushing and going to the 106, and I wouldn't be surprised if we start hitting at the $108 this particular week. We got a call on this particular trade, and I believe we're going to make some money Monday come to Bell, and I'll be looking to sell on high at Bell volatility. CSX, I like this one, and this is one of the rare instances where I don't think it's too much too soon, okay? I think we're actually tracking up to that $38 level. I think it wants to try to break and test out of its recent pattern that it had before the downward trend, and I think it's going to start testing the new highs and try to break out. So I do like this one for continuation, but be cautious because once it gets up to that $38 area, there's going to be heavy resistance, and if we can't hold that area, I think it comes down very quickly. So we got to pay attention to this particular trade, especially if you're in it. So we're pushing up to the 38, see what we do up there. Hopefully we can break through and continue on moving to a new high. But if we can't, we're going to come back down. We're going to try to cut our losses and make out with profit that we have already realized on this particular trade. And Cisco, it's been flirting with this little consolidation area that it's had for a while. I think we break out next week and we start tracking back up to that $60 range. So I do like Cisco moving forward. I'm bullish on this one. I think it's just a matter of time before we break out past this $57 range and we start cracking up there to the $60 and even beyond here relatively soon. All right, and we're going to talk about some classes we got coming up. Listen, guys, these classes are a fantastic deal, okay? $15 for pro analysis, giving you guys tips and tidbits, and you guys, every verified purchase gets a recorded version of the class. And don't worry if you can't make it live. Sign up anyways. Register your seat in the Zoom and you'll be on the auto distro list. But you can always catch this too at the website, and you can view it right on the website after the live presentation is done. It's recorded, edited, and uploaded to the website. It'll be there anytime you want to go back and catch it. And then the following week, we got the TWR trading indicators, all right? Using multiple indicators for killer profits. Listen, hundreds of indicators out of there, and they're all fantastic, but using the right ones at the right times for the right stocks in the right market, that's the difference between the professionals and the newbies. And we're going to teach you guys how to do this so that you guys can make plans and make strategies and become better and better at your craft, which for us, like-minded investors, is trading stocks and utilizing charts and indicators as confirmation. Sign up today, $15. You don't want to miss this class. Go to the website. It's right there. I'll see you there too on 13 March. On Sunday, 20 March, we got our next class that's going to be avoiding pitfalls, okay? Strategies before, during, active trades to make money. This is going to be a fantastic class because what it's going to go through, it's going to go through a systematic approach of what one of our professionals actually looks at live before he gets into a trade, and then what he's paying attention to while he's actively in the trade, looking for continuation on movements going up to hold and try to squeeze out a little bit more profit, or when he's going to cut his losses and take the profit he's already realized because we're looking for the reversal down. So definitely a class, especially if you struggle with getting into and out of trades, or you get into a trade and you don't know quite when to pull the trigger, and you may pull early and it just shoots up and you start to make more money later and you're like, dang, if I would have just held just a little bit longer, I would have made twice as much. This will be the class for you because he's going to break down his way of strategizing before and during active trades. So hope to see you there on 20 March at 1 p.m. Central Standard Time. All right, and that's the video, guys. I hope you got some value out of it. I hope you got some worth. I hope you take some of this knowledge that we dropped on you real quick and you use it tomorrow to check out the stocks when the bell rings, all right? Remember, at Traders War Room, we look at the stock market like a war zone. Stocks and sectors, those are our battle. We do it together as a team. Attack, conquer, and destroy, and we're always looking to go to war. Now, if that sounds good and you're ready to rock it with me, then all I got to say to you is follow me. Let's go to war together.